Good day Forex trader. Your USD Forex signal, Euro sell-off sees no reprieve. The pair will likely keep falling ahead of the upcoming interest rate decision by the ECB. Bearish view. Sell the Euro USD pair and set a take profit at 1.0700. Add a stop loss at 1.0925. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.0860 and a take profit at 1.0950. Add a stop loss at 1.0750. The Euro USD pair declined sharply on Tuesday and on Wednesday morning as investors reacted to the latest US inflation data. It is trading at 1.0835, which was sharply lower than the highest level this week. Focus now shifts to the upcoming interest rate decision by the European Central Bank, ECB. US inflation data. The Euro USD pair declined even after the stronger than expected US inflation data. According to the US government, the rising cost of energy pushed the prices of most items sharply in March. On a year-on-year basis, the CPI rose to 8.5%, the highest it has been since the 1980s. Excluding the volatile food and energy prices, the CPI rose from 6.4% to 6.5%. However, digging deeper into the data showed that core inflation actually declined on a month-on-month basis. It moved from 0.5% in February to 0.3% in March. It was lower than the median estimate of 0.5% and was the lowest level since August last year. Therefore, there is a likelihood that prices will stabilize if oil and gas prices retreat. U.S. stocks rebounded sharply after the strong U.S. inflation numbers, with the Dow Jones and Nasdaq 100 indices rising by more than 1%. They then quickly erased those gains and ended in the red dot. On the other hand, bond yields that have been in a strong bullish trend retreated after the inflation numbers. The 10-year is trading at 2.6% while the 2-year is trading at 2.3%. The next catalyst for the Euro USD will be the latest Producer Price Index, PPI, data that will come out on Wednesday. Economists expect that the headline PPI rose from 10% in February to 10.6% in March while the core PPI rose to 8.4%. Investors will also be anticipating for the upcoming interest rate decision by the European Central Bank scheduled for Thursday. Euro USD forecast. The Euro USD pair declined after the strong US inflation data. On the 4-hour chart, the pair remains below the 25-day moving average. It also moved below the standard pivot point and is now approaching the first support of this level. The pair is also approaching the important support at 1.0800, which was the lowest level on March 7. Therefore, the pair will likely keep falling ahead of the upcoming interest rate decision by the ECB. If this happens, the next key support will be at 1.0700. Gbp Usd Forex signal, sterling settles at a key support. The pair will likely keep falling, with the next reference level being at 1.2900. Bearish view. Sell the Gbp USD pair and set a take profit at 1.2900. Add a stop loss at 1.3080. Timeline, 1 day. Bullish view. Set a buy stop at 1.3060 and a take profit at 1.3150. Add a stop loss at 1.2950. The Gbp USD remained under pressure ahead of the upcoming UK consumer and producer inflation data. It is trading at 1.300, where it has been in the past few days. This price is near the pair's lowest level since 2020. UK inflation data ahead. The Gbp USD pair has been in a strong bearish trend in the past few weeks because of the overall strong US dollar. Investors have been worried about the rising bond yields, which have signaled that the Fed will be more hawkish in the coming months. The US published strong inflation data on Wednesday. The headline CPI came in at 8.5%, which was slightly better than what analysts were expecting. Core CPI, which excludes volatile items like food and energy, rose to 6.6%. The next key catalyst for the GBP USD pair will be the latest inflation data from the United Kingdom that are scheduled for Wednesday. Economists expect these numbers to show that the headline consumer price index rose from 6.2% in February to 6.7% in March. On a month-on-month basis, they expect that inflation fell from 0.8% to 0.7%. The US will publish the PPI numbers today. Meanwhile, economists expect that the core CPI declined from 0.8% to 0.55 on a MOM basis. This decline is expected to have translate to a year-on-year gain of 5.4%. The UK and other European countries are expected to see more inflation because of the ongoing crisis in Ukraine. These numbers will come 2 days after the UK published weak GDP numbers. The data showed that the economic growth was a bit limited in February. On Tuesday, numbers revealed that the unemployment rate dropped in February. Wage growth continued to lag inflation. Gbp Usd Forecast. The daily chart shows that the GBP USD pair has been in a strong bearish trend for almost a year. It has declined by more than 8.68% from the highest point in April last year. And now, the price has found a strong support at around 1.300, which was the lowest level this year. Gas also moved below all moving averages and the Ichimoku cloud. Therefore, the pair will likely keep falling, with the next reference level being at 1.2900. Aud USD Forex signal, consolidating below 0.7500. The Aussie is likely to decline against strong US dollar. Today's AUD USD signals. Risk 0.75%. Trades may only be entered before 5 p.m. Tokyo time Thursday. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of 0.7493, 0.7523, 0.7557, or 0.7588. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of 0.7569, 0.7548, or 0.7536. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Aud USD Analysis. I wrote in my previous piece on this currency pair on April 5 that the technical picture had become much more bullish, with the price breaking upwards very strongly on high volatility immediately after the RBA's rate statement was released, to trade at a new 9-month high price. I thought that the market was ripe for day traders to trade long on shorter time frames, and that the price might go all the way to the next resistance level at 0.7636, or even 0.7650. This was a good end call, as the price continued to advance over the day even beyond 0.7650. However, after reaching a new 9-month high at 0.7661, the price reversed strongly and fell quickly back into its former consolidation zone and has been looking weak ever since. The technical picture got somewhat more bearish as we now see the price look weakly bearish while consolidating below the resistance level confluent with the big round number at 0.7500. The AUD does not look particularly weak, but if it trades downwards without breaking above 0.7500 to make new lows below 0.7400, it could plunge quickly as low as the next support level at 0.7321. The band of several resistance levels not far above the current price suggests the line of least resistance will certainly be downwards, so the most potential is likely to be on the short side over the near term. The RBNZ's strong rate hike of 0.5% a few hours ago might have been expected to boost the values of the AUD and the highly positively correlated NZD, but the hike has had little effect, which is arguably a bearish sign. I am ready to take a short trade from a firm bearish reversal off 0.7493, especially if the 0.7500 price is touched as part of the rejection.